Is that your experience? Does the Fed get its back up?
I think the Fed mostly ignores it. Maybe they get their back up more than the opposite, but to a first approximation, it has zero impact coming from the Senate. If it was coming from the White House, I would start to get more nervous because they're going to be able to appoint people in the future. Markets get more nervous about it. That's part of what happened in UK was the Prime Minister, Liz Truss, who trashed the Bank of England in her campaign. It really came back to haunt her.
So, Jason, put aside what some senators are saying in their letters to Jay Powell. What should the Fed do this week, given where the numbers are?
Look, this week is simple. 75 basis points. They've basically all but said that. I think going forward, they have, two jobs. Job number one is that rates will be high for long. Anytime you think there's been good news, anytime the market gets happy and relieved, they should be nervous about that, second guess themselves, not have the type of false rallies we had over the summer. But their second thing is that they have to really communicate that they probably are coming down from 75 basis points. I think 50 in December would probably be fine, but it depends on the data, and they'll be looking at all that data, not on some pre-specified path, not certainly sticking with 75 at every meeting going forward.
And you think it's important for them to communicate that in this meeting?
I don't think they should communicate too much about the path. I think the high for longer is important. I don't ever want the market to think they're just going to briefly hit 5 and then go right back down at the first sign of trouble. They can't afford to go right back down at the first sign of trouble. So I think they need to keep that clear. But they need to keep clear, I think the market doesn't, needs to expect that anything could happen. We could have a slower path to a higher number. We could have a faster path to a higher number. That'll all depend on the next two CPI prints and a bunch of other data too.
Well, I was going to ask about exactly the data. We hear that the Fed is data dependent. What are the data they're looking at right now that might encourage them at least to open up the possibility of moving a little more slowly than 75 after this meeting?
There's precious little data to suggest that inflation is coming down. We can look at the shelter component of inflation and look at the real-time spot measures of new leases. Those are slowing. That'll show up in the data in about a year. I think that's a valid argument on the dovish side. The problem is with inflation numbers, there's always things on the other side. And the PCE health is probably going to start growing more quickly. That'll offset some of the shelter change. And ultimately, it all comes back to the labor market. And there was just a minuscule slowing in the ECI when you take out the volatile incentive paid. There's a minuscule loosening in overall openings and quits over the last couple of months. And I don't think that's enough.
How much, Jason, does the Fed or should the Fed pay attention to what the markets are saying as opposed to some of the underlying economic factors? Because we had Mike McKee earlier talk about that measure that Jay Powell likes to talk about, which is where the 3-month yield is today and where it's projected to be 18 months from now. That is in the process of inverting.
Yeah. The Fed should pay some attention to the markets, but a lot of the markets are trying to guess what the Fed is going to do, and so you can end up chasing your tail if you get boxed in too much by the markets. That's what happened in August, and the Fed said clearly the markets are wrong. Here's what we're doing. In terms of a recession forecast, no one wants to cause a recession, but the Fed obviously is and should be willing to entertain a higher probability of a recession in order to achieve its goal. It just may not be possible to get inflation down with a soft landing. I think there's a narrow path to that, but it's not the most likely outcome here.
And finally, Jason, let me turn to something else that you must have had to deal with at the White House, and that is this debt ceiling, which is now looming, is certainly in the new year, with some prospects of people holding it hostage. What do you make of the debt ceiling? Is there a good reason of debt ceiling? I think you've said it should be 100 quintillion. Isn't that your number?
100 quintillion. I put a lot of effort into figuring out that number. But look, when President Trump was in office, I wrote an op-ed with a Republican friend saying, let's abolish the debt limit. I would love both parties to come together and abolish it. If they can't come together, the Democrats could all on their own, with only the need for 50 votes in the Senate, under reconciliation, raise the debt limit by any amount. I think they should take it off the table forever. I think it's the best thing the Democrats could do to reduce macro risks. And by the way, I would love it if the Republicans wanted to take it off the table. I don't think it's a weapon that is going to help them. I think it's going to ultimately hurt them if they try to use it.